about my portfolio exposure, which was absolutely wrong coming out of yesterday. And it could have put me in a poor position, but being that I trade a long short portfolio, um, I'm fairly balanced for the most part, unless there's a raging amount of volatility in the stock market. So let's go real quick to the video I posted yesterday because seeing the P&L movement from yesterday is going to be important to the example. No, I didn't want to copy it. It's going to be important to the point that I'm trying to make.
Early in the shift.
So you can look at these positions. You can see it was about 805 on the day. Yesterday, naturally, was a better day than today was because I was actually net long going into yesterday, and it paid off because you can see, how my P&L changed. That was the P&L on the day, and then this is important. So keep in mind this amount. I didn't add any new positions yesterday. I ended up adding some today. Today, yeah. So I have up here the 2nd of April, but that's because I was trying to relate to the Eastern Standard Time. But really, this day for me was April 3rd, because I'm a little bit ahead of y'all. Like, okay, it says 9:44, April 4th. That's the local time. It's just where I live. But anyway, so keep in mind you saw that amount. Now let's go to my folder. So this is from April 3rd, so the same day. So at the end of the market, this is what my portfolio exposure was. So naturally, I was about $500 more in net long exposure, and my short exposure was minus 48.76. Now, this was just the bias that I had. It's still fairly balanced because what you don't see is I'm considering the volatility of every symbol that I also trade. But anyway, so that's how I looked going into today. So it looks like I'm gonna probably have a pretty bad day, doesn't it? Like when you see something like this, it could appear as though I'm going to have a really bad day, but that's not the case. I actually did a basic stress test. I did it on paper because I was going to try and post it, or add it to a video or something. Even though I have a file that'll automatically do it for me, I just input a few values in the file. So give me a sec, I'll download it because I took the picture on my phone of what I wrote. I'm gonna send it to my computer real quick and I'll be right back. Okay, I'm back. I just added the picture from my cell phone. You can see the date it was taken, 4/3, 8:44 p.m. That's my local time. So I did it yesterday. And here's the picture real quick. Excuse my handwriting. But you can see each symbol is listed. Hold on. Okay, there we go. Each symbol is listed here. I'm going to zoom out. You can see each symbol. You can see the mark price for the symbol. Here's my net liquidation value. This is how much I could liquidate the positions for in A lab. This is my new, this is what I was assuming the price would be after seeing the initial drop in the market. And so I went into today assuming, and remember, this is unrealized. I went into it with this unrealized, assuming that my unrealized P&L for the day tomorrow, so essentially today, see, I did that on the 3rd of April. I was assuming my total P&L for all of my positions would be, I figured I was going to be down $238 on the day. And if you add up the net liquidation value of all of those positions and then divide the 238 divided by that total, that'll give you the percentage down that I thought that I would be for today. Remember, these are just assumptions. And I only put this knowing that it's actually going to be a better day than this. And here's the reason why. I trade options, and these are static values that don't take into the account that the closer an option gets to the money, it doesn't take advantage of, to not confuse anybody, the closer an option will get to the money, or the closer it goes deeper into the money, the the value of that option will change at different rates. It's really just the gamma Greek. If you, for those of you who are advanced, options can end up having a higher velocity of increase in value with volatility changes, and it depends on their gamma, how close they are to the money, how far they are from the money. So if I figured if today was going to be a really bad day, and it was enough volatility, then my account would change dramatically. But I would be up instead of down 238 like I put here. So let's go to the screenshots I took after. Okay, this was the first one. I already showed y'all this one. This is the next one. My like my short exposure. This is like midway through the day. That's crazy, right? Look how much that changed from one day. Look at that. Look at the time too. Remember, that's the second picture. It was at 5:53. The market closes for me at 6 a.m. So more often than not, I miss market moves because I'm just asleep, you know. But then this was the end of the day. Yep, you see that? It says 6:34 a.m. I just double clicked it, 6:34 a.m. So the market's been closed for about 34 minutes. But I had what did I do at the end? I did get rid of one short to try and drop this before, to try and make my short exposure go down. And I added a few longs, as you can see. So I added more to my long positions to balance out my exposure a little better. But it wasn't really enough, as you can see. So here's how it looks now. I made it just a little bit closer. So now my bias is more short, but I added to my higher beta, my higher volatility longs. But my bias now is short, and it's a lot more short than what I desire for it to be. That's no big deal. But look at how today performed. Look at the time. I took it super late. I took the screenshot super late because I added a futures position too. I felt like I got a pretty good deal on some Russell futures. So I'll pull this one up. I'll make that big. This will be the last one that I show because this video is long enough. And so here is how the day went. If you add these values up. So in other words, yesterday was a mostly green day, and I was up, 800 plus, something like that. Let's see. Yes. Okay. So yesterday I was up 876, and today I was only up total by the end of the day $327. But either way, as you can see, because there's volatility, and apparently I'm on the right side of that volatility, and because I've structured my portfolio well, praise God, I am up on two totally opposite days because yesterday was, I think it was a pretty green day for the market, but today was a super red day. But anyway, I just wanted to show y'all how my exposure has been changing over time. The reason why I didn't buy any more longs is because I'm probably going to scale into another long. But yeah, I'm pretty pleased with how it's going. And if anybody's interested in learning how to do this, the way that I do it, I went to school. My accounts got humbled some years ago, and I ended up taking some classes. And I'm glad that I took those classes because this is not um, this is not a, what's the word? It's not by chance. This is not by chance. This is not from luck. This is from a process that I've learned, doing well and making money over time. This is from a process that I've learned. Sure, this is a small account. This is the same uh, account that I was telling people I'm doing a small account challenge in. It's just the net at risk is about to be going up exponentially because I have a bunch of capital in there. I'm just not using it, but I'm about to start using it. So yeah, I hope that all of those words I said made sense. So take care. God bless everybody. Goodbye.